Everyone, welcome to Market Insight for the week of February 19th and through the 23rd. I'm still away this week, so this Market Insight will be a little shorter than usual. Now let's get right into the monthly chart. Monthly, as we know, it's at the monthly supply line. The price is at the supply line up here. And it's starting to back off of that line. Taking a look at the weekly, weekly is showing Wyckoff principles up here at its supply line. 3 weeks ago on this day, we rally up on good volume and it closes above the supply line. That was pretty bullish. 2 weeks ago, we continue up. We follow through from the prior week, but the volume is lighter. And this reflects potentially tiring demand, but the firm close said there was still a possibility to go higher. And then last week we did go higher, a little higher, but buyers couldn't hold the highs and instead closed below last week's high and close on an increase in volume. That's negative. That's supply coming in. So we're seeing shortening of the thrust, no demand, and effort to go up, no result, meaning supply is present. So these are the 3 most recent weeks. And the market's becoming vulnerable, as we can see, to a pullback of some degree. And since this is occurring on the weekly, we would expect that to be a little bit bigger than a normal daily pullback. Let's look at a daily chart. Day may have been the top of the recent rally out of the January lows. We'll see what happens this week. The close is clustered with the prior Friday, and it's, went up and closed poorly. And the volume was relatively light here. The volume had been declining for a while. And so this occurred near the daily supply line, right in here, the supply line, and it left the market vulnerable to a pullback. And Tuesday, we see the market react, wider spread down on larger volume. Now, it may not be the largest volume. We have a larger downside volume here on the last day of January. It's close, and it indicates supply has come into the market. Tuesday's price action was negative, not only in terms of the size of the spread or the range and the volume, but it also penetrated the demand line quite significantly and weakened it. So Wednesday was an inside day with buyers stepping in and buying the dip. Excuse me. Thursday continued that, but the volume starts to tail off. And then Friday was almost an outside down day, not quite, but it did have with a pickup in volume. The key thing here was that Friday was unable to hold Thursday's high and closed on its lows here. And down near the lows of Thursday. Now, the last day of January saw a similar action. Let me erase here so that we're clear. Last day of January, we had a similar. This was a shakeout, right? We had similar action to this down day here. On Tuesday, we saw a large down bar and the largest downside volume since the lows in January, anyway. But the market recovered quickly and rallied to new highs 2 days later. We're not seeing the same kind of robustness, bullish robustness in here, and that's because I think we've reached the higher time frame supply lines. So for this week, if we're unable to push up to new highs, resistance being Friday's high, but the real resistance is 5066 here, Monday's high. If we're unable to rally above that, and then the next level up would be 5,100. That's the point and figure count, and one of the point and figure counts, and also a nice round number. So those would be the two levels of resistance I'd be looking at for next week: 5066 and 5,100. The first level of support occurs down 5. And there's a small shelf of support area from earlier in the month that kind of acted as resistance and could be support here. Below that is 49.36, the 49.36 or 49.35 area. If the market really breaks to the downside, it might get down to that shakeout, that January, the January 30th, 31st, and February 1st shakeout there of 48.66. I don't really anticipate that, but we need to be aware that that's a possibility. And it may not get all the way down there in a week. If it cracks 49.35, it may be somewhere in the middle here. So that's sort of the landscape we're looking at on the daily chart for a down move. And then looking at the indices, the major indices, we can see that all are basically poised to head down with weakened demand lines, especially the Dow, look at that, and an inability to reach new highs. All the markets, and especially the NAS, couldn't reach new highs. So we have the presence of supply, weakened demand lines, inability to make new highs. I mean, we really are vulnerable to a pullback. And interestingly, the NAS on Friday was the weakest market here. So that may be the one that takes us down. We'll have to see if we go down. Now, while I'm anticipating a possible reaction here, pullback, there's no real cause or distribution structure up in this area off of the point and figure chart. We are at the at the target. We have a target of 5,100 off of this count, and a confirming target of 50.50, which we reached, or which we're about to reach. No, we reached it. Yeah, on this chart, it must be a little off. So we are vulnerable to a pullback because we reached the target areas, but because we don't have any real cause in here, any significant distribution structure, well, I'm not expecting a huge pullback. So now for next week, I'll be back on next week, and we have on Monday at 4:30 a membership monthly meeting, and we'll be talking about, last month we talked about mental traps, and I'll continue with that theme. There's a couple of other mental traps I want to talk about, loss aversion being probably the biggest. And we'll talk about that on Monday at 4:30 Eastern time, right after the close. And then we'll do Thursday, we'll have our next deep practice on our normal schedule. So looking forward to next week, and I will see you all on Monday. Enjoy the rest of the weekend, and I'll see you Monday. Take care. Bye-bye.